Which regime is more beneficial to me? Is a natural question, and that comes to every taxpayer's mind due to the anxiety of missing benefit if the option is wrongly chosen. Unfortunately, there is no straightforward answer. The culprit is the complexity of the Indian tax regulations. Comparing the old and the new tax regime may look complicated at the first, but if you approach it systematically, it is not that difficult to figure out what works best for you. Let me answer this to erase your anxiety once and for all. Keep in mind to follow these 3 steps. First, calculate all the exemptions. If you live on the rent, you could claim HRA, one of the biggest salary exemptions. Other tax-free components like LTA, food bills, phone bills, etc. All these will become taxable if you shift to the new tax regime. You will get the standard deduction by default in the old as well as in the new regime. Second step is just look at the deduction. In the old regime, there are numerous deductions like those available under section 80C, home loan interest paid, and such like. In new regime, you can't get any deduction. Now, third step, now combine these exemption and deduction and minus them from your salary to see your taxable income and calculate what it would be if you let go of these deductions. This should be the deciding factor between the new and the old tax regime. Let's take 3 scenarios to see how deduction and exemptions or lack thereof will impact your tax under the new tax regime and the old tax. Scenario 1, when you don't claim any deduction or exemption. Scenario 2 will be when deductions under section 80C and 80D is claimed. Scenario 3, we have taken when taxpayer claims deduction under section 80C, 80CCD, investment, interest on home loan and health insurance premium. To have a clarity, we have considered the most common deductions like 80C up to 1,50,000, interest on housing loan up to 2 lakh, medical premium up to 50,000 for self and family, NPS additional deduction up to 50,000, and total amount comes to 4,75,000. But remember, in each scenario, your taxable income under the old tax regime can be reduced further if you consider other exemptions such as HRA, LTA, reimbursement, conveyance allowance, etc. Let's talk about the first scenario when you don't claim any deduction or exemption. For this purpose, we consider an example. A person, Sankalp Agarwal, is an employee who works as an assistant professor and has an income of rupees 9 lakh. Unfortunately, due to his education expenditure and family obligation, he is unable to avail the deduction available under the old tax regime. So under the old tax regime, his tax liability comes out to be rupees 85,800. This is how the calculation worked for Mr. Agarwal. 9,000 total income, whereas 50,000 standard deductions, so taxable income comes to 8,50,000. So the tax outgo on 8,50,000 will be 85,800 in the old regime and 41,600 in the new regime. On the basis of this working, if Sankalp Agarwal choose the new tax regime, his total tax outgo will be rupees 41,600 only. He made saving of rupees 44,200 by opting new tax regime. So can we say when you don't avail deduction, the new tax regime work out to be better? I think it will be quite early to have this ruling. For that, let's check it with some more income range and then interpret it. I have provided the tax liability under both the regime at different income level in this table. If you saw the income level of rupees 9 lakh for Sankalp, there is a saving of rupees 44,200 by opting new tax regime. And these savings are increasing as the income level is increasing, which clearly indicate opting for a new tax regime is beneficial when you do not avail deduction. The new tax regime work out to be better. In this scenario, we compare the two regimes, assuming that the individual does claim deduction in old regime. Assuming Agarwal is availing deduction available under section 80C for 1,50,000 and 80CCD 1B for NPS up to 50,000 in an old tax regime. If you include the standard deduction of rupees 50,000, the taxpayer get a total deduction of rupees 2.5 lakh. So under the old tax regime, his tax liability comes out to be rupees 44,200. This is how the calculation work for Sankalp. Total income 9 lakh, 2 lakh deduction under section 80C and 80CCD 1B, 50,000 standard deductions, so taxable income comes 6,50,000. On the 6,50,000, he is going to pay 44,200 tax in old regime and 41,600 in the new regime. On the basis of this working, if Sankalp Agrawal choose the new tax regime, his total tax outgo will be rupees 41,600 only, lower of this. So can we say when you limited deduction, the new tax regime work out to be better? I think it will be quite early to have this ruling too. Let's check it with some more income ranges and have a further clarity over this and then interpret it. I provided the tax liability under both the regime at different income level in this table. If you so the income level of rupees 8 lakh for Sankalp, there is a saving of rupees 7,800 by opting old tax regime. But at income level of 9 lakh or above, there is a saving only on opting new tax regime. But if your income is below 8 lakh, both the regimes are in difference, you can opt any of those. Which clearly indicate when you avail a limited deduction, if your income is below rupees 9 lakh, then the old tax regime is beneficial as you are saving more tax. As your income increases, you save more tax with the new tax regime only. Scenario 3. In this scenario, we compare the two regimes assuming that the individual does claim maximum deduction in the old regime. Assume Sankalp Agrawal is availing deduction available under section 80C, 80CCD, interest and home loan, medical premium under the old tax regime. If you include the standard deduction of rupees 50,000, the taxpayer get a total deduction of rupees 4,75,000. So under the old tax regime, his tax liability comes out to be rupees 0 due to the rebate under section 87A. This is how the calculation worked for the Sankalp. 9 lakh total income, 4,25,000 deduction under section 80C, 80CCD, 80D, interest on housing loan, and 50,000 standard deduction, which remaining come taxable 4,25,000. So the tax outgo for 4,25,000 will be 0 in old regime, and for new regime 41,600. If Sankalp choose the old tax regime, his total tax outgo will be 0 in the old tax. So we can say when you avail a maximum deduction, the old tax regime work out to be better. And let's check with some more income range, have further clarity over this and then interpret it. Looking to the tax liability under the both regime at different income level in this table, if you saw the income level of rupees 9 lakh for Sankalp, there is a saving of rupees 41,600 by opting old tax regime. And these savings are increasing as the income level is increasing. Which clearly indicate whatever is the level of income is, opting for old tax regime is beneficial when you avail the maximum of your deductions or exemptions. The old tax regime work out to be better. On the basis of whole analyze, we reach to conclusion. If you avail no deduction exemption, new tax regime is best for you. If you are taking limited deductions, then below 9 lakh income, old regime is going to be better and best. Above 9 lakh income, a new regime is going to be best for you. If you are availing a maximum of your deduction and exemptions, old regime is going to be best. I think now it is clear to all which tax regime is to be suited for you. Kindly note it, the best option will depend on many aspects. Whether you have an existing housing loan, whose benefit you could not want to leave, you have a medical and other tax deductions available with you which can be beneficial. What may be a tax benefit for other may not be for you as an individual. It's my suggestion, irrespective of your chosen tax regime, please invest in ELSS, mutual fund, EPF, PPF, which will help you to cultivate the habit of saving. The changes introduced doesn't really make things easier for you. However, there are one mistake you must avoid. Don't select the old tax regime and then make investment to save taxes. Saving taxes is incidental. You should not invest, buy insurance or donate only to save tax. Achieving your financial goals and securing your family future should be the reason driving your decision, not the tax benefit. So it is advisable to consult professionals before taking any of the stand over a new tax or old tax, selection of old tax or new tax regime. This is from my side. I think you like the video, and please do not forget to share and subscribe the channel if you really like the content.